Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So we saw the market close again lower this week, down 0.39%. We are still up year to date, 10.64 in the S&P 500. Now, really the biggest two market movers this week is on Tuesday, we had a massive crypto sell-off, which then had some implications for the rest of the market. So that's the negative news. On the positive end, we had the lowest initial jobless claims since the pandemic has started, and that has definitely helped the market recover from some of the lows from the week. If we get into the market, we can see exactly what I was talking about. Beginning of the week, we're doing relatively fine. All of a sudden, Tuesday, we have this massive correction in cryptocurrencies, which leads to a dramatic sell-off in the stock market. We bump around a little bit, and then we start to get more positive economic data, and it leads to, honestly, a full recovery within the couple days from this sell-off. Now, from peak to trough here, it's about a 2% sell-off. We saw Bitcoin sell off close to 30% in one day. So it's certainly not directly correlated to that amount, but it is interesting to note that Bitcoin selling off did lead to a broader market sell-off.
And what would you attribute the sell-off from Bitcoin to the S&P, Knight?
Yeah, well, that's a great question. And we've known for a while, especially in this crypto run-up, one of the biggest fears has been the over leveraging within the crypto space. So what is leverage? That's buying these crypto assets on margin, using your crypto assets or even your other stocks as margin to then be able to buy more crypto. And what happened was when crypto fell 30 to 40%, the first thing that happened in the morning, you have these banks calling up, hey, where's my money? You don't have my money? All right, sell. So they sold all of the assets that were on loan to cover that margin call. So it's very likely that within that forced liquidation, there was forced liquidation of a lot of different stocks across different sectors, which then ended up pulling the S&P 500 down.
Absolutely. We've seen this before when other asset classes begin to drop seriously and there's leveraging. There becomes what I call a liquidity crisis. And we know that from other issues when certain asset classes have liquidity crisis, that most asset classes begin to drop down. Basically, you're selling everything in order to have enough cash to pay your debts. And that's what happened here with the cryptocurrency.
Yeah, now going back to why did cryptocurrency sell off? There's two main reasons. Last week, Elon Musk tweeted that Tesla would no longer be accepting Bitcoin, and that sold off a little bit. And then the nail in the coffin this week was China coming out again. A little bit surprising because China has had this same stance for the past 2 years, but they reiterated an earlier claim saying that they were going to be cracking down on financial institutions and mining companies. And with that news coming out, it really just sent the whole crypto market into a massive sell-off. And as we discussed before, because of the over leveraging within the market, it did have a effect of bringing the rest of the market down. Away from the bad news of the week, the good news of the week, initial jobless claims came in lower than expected and the lowest that we've seen since the pandemic started. Obviously, this is a leading indicator for the market and just a really positive, less people leaving the workforce. But one thing that it also is interesting is the amount of states that have now decided to leave the federal program for unemployment. I think currently we're at 13 states. All of them are Republican-led states. Not really surprising there, but it does lead to the question of, is this the right move? Wyoming or Montana that left stopped the unemployments and they actually saw more people start going back to work. Now, that is just one state, but it is an interesting thought process or thought experiment.
Yes, and what we've been hearing from many of those governors of the states that pulled out of this unemployment system is that the unemployment stimulus payments have been keeping people from returning back to work. To some degree, that was the purpose of these stimulus payments, was that during a pandemic, you don't want people being forced to work. Then the question becomes, at what point are we far enough along in the vaccine process where we're close enough to herd immunity or in herd immunity that we no longer need to give people incentive not to go back to work because it's dangerous. And we now have 13 states where they're trying to get people to go back to work. Remember, there was a large shortage of workers in certain areas of the hospitality industry, which is opening up a great deal of lack of people who work in them. And a lot of we're hiring, looking for hire. So this may be a sign of that. It'll be interesting to see how quickly information comes in to tell us whether or not there's a problem or whether this was the right move.
It is interesting to see. I think the US currently is sitting right around 50% on the vaccinated. So we're not at that herd immunity between 70 to 90%. So as people start going back to work, as these states, if they do drop out, and like I said, they have seen more workers start going back to work since then, it will be interesting to track the cases. Do the cases start rising again? Now we have that happening, as well as Memorial Day weekend, which is a big get-together time, as well as just in general, a lot of loosening restrictions. Now that is for people who are fully vaccinated, but it's really hard to prove that you've been fully vaccinated and everything like that. The last thing, Rich, you found an interesting article this week talking about India's economy and this most recent shutdown, but in some ways, actually, the second shutdown not having the same economic impact as would have been expected in the first one. So you want to speak about that a little bit?
Yeah, well, there were two things going on with India. As can be expected, India right now is the epicenter of pandemic. They can't keep up with the number of people getting sick, number of people being hospitalized. They don't have enough room in the hospitals, and their crematories are running 24/7. It's a disaster. As a result, the economy itself is slowing down. There's more shutdown related to it because people are afraid to go out and get ill. But that, even though I've said that, what they've noticed is that the contraction in India, at least in May, has been much less than what they were expecting, considering how much things are shutting down. And it shows that quite a few of the industries and individuals in India have learned how to work during a pandemic and to continue being employed or making ends meet. But the longer this continues, how will this affect the Indian economy? And are they going to come up with a mutation that will be much deadlier and impervious or not affected by the vaccines for everybody else? This may be global worst case scenario.
Yeah, it is absolutely interesting that this shutdown is a lot less harm than was expected or even previously seen. But what you speak to, at what point does it stop being country versus country or vaccinate everyone in the US? Even if we reach herd immunity of 70 to 90%, if we're still having this raging global pandemic in India and new mutations, that's going to likely come into the US. And in some ways, self-preservation would actually, the best thing we could do would be to start sending vaccines or to start helping more in India, which our government is starting to do. But it really does become a global pandemic that we all need to help with.
Absolutely.
Well, as always, we appreciate you guys listening. If you could do us a favor and hit that like button down below, subscribe to our YouTube channel. We come out with videos like this every week, talking about the stock market, talking about what's going on. And always, we're here to support you. Your money's here to support you. We'll see you again next week.